Hey guys, Don Durrett, Gold Stock Data. So I have a treat for you guys. I'm going to look at development stories that I like, and we're going to go down from the biggest upside to the lowest, but we'll see how long. It's 7 o'clock here, so I'm only going to try to just do 1 hour. So we'll probably stop at 8. Um, just watched the Eric Sprott semi or half year review. It was excellent. You guys should check it out. It's on. You should be able to find it on YouTube. 40-minute review by Eric. State of mining and what he thinks going to happen with silver and gold prices and various stocks he likes. Really enjoy those interviews. But he was talking about what he looks for is the cost of an ounce of gold or an ounce of silver in the ground. If he can buy it for $10 or gold or silver for I don't know 25 cents, 50 cents, that's what he looks for cheap stocks. Whereas myself, I prefer to chase cash flow. I do the optionality, of course, and I do like to buy stocks that way. And he talked that he likes big deposits, and I agree with him. Like Hycroft, nobody will touch Hycroft, but I agree with him that eventually it'll be economic and nobody wants to own it now, but they will later. And I do own Hycroft. But my sweet spot is chasing free cash flow. So here, what I've done is these are all my development stocks that are in the newsletter. I have a list. It's called development stocks. Or these are stocks I've vetted somewhat, and I don't own them all, and some of them I don't like as well as others. But I'm sorting them by their upside. So this is the future fully diluted market cap upside using cash flow. So this is the growth. So core showing is a 100 bagger. That probably is wrong. Um, so Geo-Pacific is a 60 bagger, and then Chesapeake is a 40. I don't, I'm only going to talk about the ones that I like. So I think I don't like the risk reward of core and Geo-Pacific. So we're just going to pass, we're just going to skip those right off the bat. And we're only going to talk about the stocks that I like. And so the first one is Chesapeake. Eric mentioned this one, that he likes this one. I do too. This is, very large, low grade gold silver project in Mexico. It's going to take a while for them to build. That's the reason why it's cheap. This one is a really long, it's out there a ways. We don't even have a PFS on it yet. I don't think we're going to get a PFS till 26. We're not going to get one this year. And so it's a long-term investment, but it has a ton of upside. I mean, I have it printed as a 40 bagger. But the key here, of course, is going to be dilution for the capex, how much it cost. But I like the insiders, so I don't think they're going to sell it. I think they're kind of like Discovery Silver. I think their intent is to build it. Um, it's not nearly as strong as the Cordero project, I don't think. But it's a strong project, so I do like that one. The next one is Stellar. Stellar's in Mexico. Excuse me, in Canada. I like Stellar a lot. It's another long term, but not nearly as long as Chesapeake. I mean, this is 3 to 5 year project. But that one I like, and you definitely take a look. Ascot, Ascot's had nothing but problems. I it's difficult to like this stock because they made so many mistakes ramping it up. They're supposed to get into production in August, so they're 2 months out. So we should know by September, October if it's going to work or not. It's so cheap right now that, maybe it's better just to wait and wait till the stock goes up, say 20%. You're not going to miss it. I mean, it's so cheap, right? So you basically so Ascot's a stock to watch. And if it does start to trend upward, then you might want to jump on board. If we start to hear some good news, some favorable news, then you might, kind of wait until the good news comes out, I suppose. Is it a good spec bet at this level? I don't know. A lot of people have said it's a mine that's very difficult. It's not an easy mine to mine, and that they could still have more problems. But it definitely has a ton of leverage. Gold Terra, I do own Gold Terra. It's a small deposit right now, but it's high grade, but it has potential if they can expand production. I think it's a pretty good spec bet, but it's not outstanding, if you will. So I wouldn't put it in that regard. It's a real outstanding development story, but it's definitely pretty juicy at this valuation. It's printing as a 35 bagger with a high grade and the exploration potential. Bellis, I don't own Bellis. I don't really like it. They've had trouble down in Brazil. They're trying to get that permitted. I think that's more of a watch stock as well. Norsemont, I bought Norsemont this week, and I talked to their CEO Mark Levy, and he's been successful. His last two projects he sold, and Norsemont's market cap is like 30 million, 35 million. Um, Development story. I really like the story, and this is probably one you're not aware of because I just bought it, so it's the first time I've mentioned it, but I only have it at a 2.5, so it's not a three yet, but it's definitely 10 bagger. It's starting to move. I have it as a top pick. It's not trading in Toronto yet. It's still trading in Vancouver. I think it's in the pinks. Let's check the OTC and see if it's trading in the pinks. I think it is. Maybe not. Maybe I'm wrong there. But I bought it in Canada. Yeah, it's trading in the pinks. You want to buy it in Canada? NOM, NOM. But 26 million, and you can see it's really popped. Back in September, it was trading at $5 million. So it's five bagger in just a few months, but it's still at 26. It's still really cheap. Insiders are really strong, 28%. The CEO and his family own 28% of it. Um, so it's in Chile. It has they have a mill, 3,000 ton per day, but it's going to take them about 2 years to permit that mill. But the capex is going to be low. They think it's going to be a very large project. This is what got my attention. Recently, they came out with updated resource at 2.2 million ounces M&I plus 500,000. But when I talk to them, he thinks this could be a 9 million ounce deposit. They really like the geology. But even if it only goes to 4 million ounces, it's a big win. And the CEO, he wants to build this into a $1 billion company, and it's at 25. And in a fairly tight structure, 21, 21. They're not going to need a ton of money to get this thing construction ready. But I'm only valuing them at their current resource, 2.2 million at 60,000 ounces, which is they should do a lot better than this over time. But it prints as a 35 bagger as a 60,000 ounce producer. So this stock is really interesting. In addition to his 28%, they have the board owns 10% and the high net worth own another 10. So that's 50%. So they're not selling. 800,000 ounces of the total is in oxides, which is what they're going to mine first. And then they have a stockpile of like 200,000 of this 800,000. I think 200,000 ounces is stockpiled, which is right here. They have a stockpile of 200,000 ounces at 0.75, which they can heap leach. That's going to be where they start, and then they'll do the mill second. But about around $65 million to restart the mine. That's definitely going to create um, some dilution. The surrounding area, from what he said, is we don't have any problems with any of the locals. They also think, and in addition with the deposit, where he's putting this really high, a $9 million deposit, plus that he thinks that on this property, it has 1 billion ounce, $1 billion copper deposit on the same property is what they think, but they're gonna have to drill. But this guy's been successful. This is his third project. He sold the other two for nice profits, and I think he's going to pull it off. So Norsemont is definitely a project to take a real strong look at. Spanish Mountain, definitely a fan of Spanish Mountain. Spanish Mountain, it's in Canada, low grade, large open pit, British Columbia, I'm pretty sure. And they've moved forward. So they sat on this project for years. I mean, 10 years without doing anything, just sitting on it, doing nothing. And now they're moving forward. They're drilling, they're moving it towards production. So I'm a big fan of Spanish Mountain. Falco, when I say I'm a fan, I own it. So Falco, I'm a fan of Falco. I like it. Another project in in Canada. The one thing about these development stories is you always have to think in terms, unless um, we have a construction decision within 2 years, then they're going to be long-term bets. And so none of these really, the ones that I went over so far, really, I don't think any of these have a construction, other than Ascot, have a construction decision within 2 years. Norsemont should, but I don't think Spanish Mountain and Falco are 2 years out. So they're a little more, these are a little more long-term. They're 3 to 5 years. Paramount Gold Nevada, the reason I like this stock and own this stock is because of their sleeper project in Nevada. So we get the Grassy Mountain project. Um, by the way, this is their future cash flow, their expected future cash flow. So um, Paramount Nevada, I mean, we get their sleeper project for free because Grassy Mountain is worth at least 3x their capex. And so Sleeper is a 3 million ounce project that could easily grow by 20, 30, 40%. There's a lot of drill targets on Sleeper in Nevada. It's a low grade project, open pit, ton of potential. And that's why I like Paramount, Nevada. Tesoro, don't like the risk reward. Nova Minerals, I own this one. This one's really long term. It's they have a lot of gold, but their flagship property, a flagship deposit, is like 4 million ounce open pit in Alaska, and they're not going to get that thing built for 5 years. So it's a long termer, but it's super cheap. So and they have strong insiders. I don't think they're going to sell. Um, I don't mind. The one thing about these development stories, most of them are long term. I mean, it's nice when you can find one with a construction decision within 2 years. Those are the juiciest ones if you can find them. But most of your development stories are going to be 3 to 5 years. You don't want to go too much beyond 5 years. Um, like um, so, the ones that are beyond 5 years, I'll point them out to you. But Nova is right on the edge there. I think they're around that 5, 6 mark. But they have the goods, and I like Alaska. But one point I want to make is you're not really picking winners here on these development stories. What you're doing, because the development stories are going to break your heart, what you're doing is you're trying to pick potential winners. But if you get enough potential winners, it's inevitable that some of them will be winners. And that's the way that I look at it. Um, Wallbridge, um, I, I was a fan of Wallbridge, but I don't know. They fell out of favor for me for some reason. They just weren't making any progress. And the one thing that I'm big on is I want management teams that have a plan. And sometimes these companies, they just drill and they just never really figure out what they're going to do. And sometimes I have patience with development stories like that. And then sometimes I lose my patience. And I kind of lost my patience with Wallbridge because I just don't see the plan yet, and they're just still drilling. but Wallbridge is it's in Canada, which is great. It still could definitely work. It could still easily it definitely has a ton of upside. I've always liked the properties. I'm just not excited about how it's unfolding. So it's one of the few that I sold. Um, uh, Hycroft. Um, I like Hycroft because I think that at a certain point, once gold gets above $4,000, for instance, I think Hycroft is going to start their property is going it's going to start to work, if you will. Right now, I don't think they we're waiting for a PEA. That we don't have a PEA on the project. Now you say, okay, Don, you got frustrated with Wallbridge, but you're not frustrated with Hycroft. Well, Hycroft was already in production at one time, and it's a pit. I mean, it's basically a big, massive pit, and so it's a lot. That's a lot easier to do a PEA on and mine. Open pits are a lot easier, whereas Wallbridge is underground, which is a lot more tricky. Underground deposits are difficult to mine, and I think that's one of the reasons why, unless they have a really good understanding of the deposit, and I just don't think they do yet. Silver Storm, um, Silver Storm, I own. What's great about Silver Storm is it's got a ton of upside. Silver miners, this is, I think this, Chesapeake. Well, I think this is the first silver miner. This is the cheapest silver miner on the development list. Um, their San Diego project, I think they're going to be able to bring that ore all over to the mill that they're putting into production this year. I think that's the reason why they bought that mine from First Majestic is to use that mill for San Diego. So they're going to mine 2.5, 3 million ounces at the mine they got from First Majestic that's going into production this year. And then they're going to drill San Diego and then permit it and move that and truck the ore over, I believe. So if they do that, this is going to have some really nice upside. So I like that a lot. Galleon is it's Galleon isn't a slam dunk project. I do own it. It has potential, but it's not a big mine. So it is in Canada, which is good, but this isn't what I'm excited about. But I bought it just because it's so cheap, and I have it rated pretty darn good. It's not a top 25. I have it as a top 15, top pick, but I have it rated very high. I don't have it as a B plus, but you're not going to get a developer with a B plus. Pretty rare. This is about as high as you get for a developer, which is it's so I have it rated high, but it's not. I'm not. One of the reasons is just the risk reward. I mean, it's market cap of $21 million, which is kind of crazy cheap for a project that's in Canada. And so this West Cache project, so it's both an open pit. So the open pit's 300,000 ounces at 1.5 grams, which is really good grade, and an underground mine of 800,000. So it's only 1.1 million. The capex is around 120 million to produce 85,000 ounces a year. But the AISC is low, $1,000 AISC. So even if they miss, maybe 1,200, but we're looking at 27, 28. So it's going to go up a little bit. But right now it's fairly cheap. They're currently permitting the project. And, if we can if they can expand the resources, which I think they will, and if their insiders are strong enough, so either insiders at 35%, um, if they if they can build this, and I think they will, Eric Sprott owns 20% and 28% on an undiluted basis. So that's great. So we got Eric's blessing on this one, and he's going to, try to get them to build this thing. And so it's basically, let's see, I don't list where this project is. Let's go down and we'll see where it's at. Um, it's in Timmins. So 25,000 hectares in Timmins. Timmins is a mining district in Ontario, which is outstanding. So the location is fantastic. They got the gold and it's becoming advanced, but it's not super exciting. But what's exciting is the valuation, 21 million, and we're looking at free cash flow of 252. So when you compare this free cash flow to the market cap, it's a big discrepancy. That's why it's printed as a 30 bagger. All we need to get them to be an 80,000 ounce producer. And the capex isn't, too massive. A lot of people are going to pass on this because they'll say it's not big enough. But we have a PEA of 120 million capex. So if we start getting a mania into the miners, when you're going to see these Canadian stocks really start to rip. And so once Galleon, I think Galleon could easily, double and double again. So they go double to 40 million, double again to 80 million before they need to finance this capex. So I'm expecting them to be an $80 million company when they go to finance this capex around 27 is probably 26, 27, probably gonna be 27. And it'll be a 1 year build. They get in production in 28. And if that happens, this is it's definitely an interesting stock. Okay, so that's that one. NexGold is, one of my favorite development stories. And I mean, it's kind of crazy that NexGold is this cheap as a 26 bagger because they have two 3 million ounce projects in good locations. One of it's kind of crazy that the market is just ignoring NexGold. They have two strong projects. Goldboro is they got good news on permitting this week on Goldboro, and it didn't really move. The share price didn't move, which is kind of crazy. So I remember I said I don't have very many developers at B plus. I have NexGold as an A minus. This is definitely the best you can do as a developer in a top 25. And the reason why is because of their quality of the project. So the Goliath Goldland is in Ontario, 3 million ounces, and then Goldboro is 3 million in Nova Scotia. So two beautiful projects. Both of them should be permitted this year. And they could build one project, then they turn around and build the next one. Plus, both of the projects, the CapEx isn't exceedingly high. Exceedingly high to me would be 400 million plus. So we have Goldboro, we have 200 million, and Goldland. See what the capex here. I thought we had it 250. I think it's about 250 for the other one. So they're not super high capex, and once they finance that first one and get it built, it'll be very easy to finance the second one. So the key is going to be how much. And look at the market cap, $120 million. This is just ridiculously cheap. This thing should be $500 million. Um, so, we have 6.5 million ounces. I have them using six in the future. I mean, 6 million as a 250,000 ounce producer. So we have them, I have $800 million free cash flow versus their current market cap of 120. Print is a 26 bagger. Um, so you can see how it's one of my favorites. Sun Silver. I do on Sun Silver. I don't know if they're a developer. It's a big low grade, not super low grade, silver project in Nevada. It's a new company, a new project. Sun Silver is new. They acquired this project that I liked from somebody else, and that's why I bought them. But I don't know if they're a developer. But if they're not a developer, it's an optionality play. But if they build it, I have them as a 26 bagger. And this is another one that's under the radar. And the reason why is because it's an Australian company. And so people are, they don't like to buy these stocks in Australia. So it doesn't trade in the US. So you have to buy it in Australia. But I have it as a B minus because I don't know if they don't have a plan yet. They're just drilling. I don't know if they really want to build it. But the insiders are pretty strong at 35%. But if we look at the size of this thing, it's only a $76 million market cap. But they have 480 million ounces of silver equivalent, including gold at 60 grams. So this is a lot like Hycroft. Very low grade, but fantastic optionality. Just think if they sold for $1 an ounce, that would be 480 million, and they're currently at 76. So eight, that's about a three bagger. Um, that, so I don't think it would go for much less. It's called Maverick Springs, and it's in a good location in Nevada. They're working on permits now, but I just don't know if they are a development story. I own it because not for the optionality. I own it for them to build it. But right now, all they're doing is drilling. I don't think it's going to grow much in size. So they're going to do a lot of infill drilling to make sure they're comfortable with it. And the more they drill, the more their exploration. Because if they trust it, then they're just going to start mining this stuff. And they won't waste a lot of money on drilling. But if they're trying to sell it, then they're just going to drill, drill, drill kind of thing. It's only about 1,000 acres, so I don't think I think this thing is pretty much drilled out. It's time to build this thing. But if they do build it, so this might be a company to just keep an eye on because if they do decide to drill it, build it, 480, we're looking at this is 15 million, a year ounce mine. I'm valuing them at 15 million. I mean, it could be a little bigger than that, but you're looking at $1 billion in free cash flow at $100 silver. Um, that's got some serious upside. Okay, Sonoro Gold. I do like Sonoro. It's a small gold project in northern Mexico, but it's super cheap. And all they have to do is get the permit, and then it'll take them about a year after that to get it to before they go into to build it, and then it's about a 1 year build. So it's about 2 years for we have to wait after they get their permit. So it's not super slam dunk, but it's got a lot of juice on it as a 25 bagger. And the property's only been 30% drilled, so it is, and it's about 800,000 ounces, but this thing could easily get to 1.5, I think. And if they get to 1.5, so I have it fairly well rated 4.3P. It probably could be a top 25. I only have it as a top pick, but market cap of 33 million. Um, and they're currently about, I'm only using 500,000 ounces, but their drill results show that it's at least 800,000. I'm valuing them at 1 million ounces as a 50,000 ounce producer. So that's a pretty good mine life if they have 1 million ounces. And I'm pretty sure they do have 1 million. Based on their current drill holes, they think it's easily 800,000. Plus, it's only 30% drilled. I think there's 1 million all day, and it's probably 1.2, 1.5. But as a 50,000 ounce producer, capex is very low on this. It prints as a 25 bagger, but 147 million free cash flow, and it's currently at 33. So I mean, these are the biggies that I look at when I value them. So it's when you can find 20 baggers, I that's kind of what I'm looking for. If I can find pretty solid 20 baggers, it's hard for me to turn them down. You wait and see which ones are going to be the winners. But this thing has a low capex. Um, Initial capex is 15 million, so I think it's going to be about $20 million, which is nothing to build this mine. So you're talking about a 50,000 ounce producer for 20 million ounces, $20 million, excuse me. That's the reason why I like it. The chairman, they thinks it's going to get to 1.5 to 2 million. and I trust him. I think he's got a ton of experience. That's his opinion, 1.5 to 2. I think it gets to 1.5. If it gets to 1.5, this thing definitely has 20 bagger written all over it. And they're not selling, they have strong insiders. So I think Sonoro definitely is very interesting here. Revival. Big fan of Revival. Revival, it's another 3 to 5 year project. Hugh Agro is the CEO. I think, he's kind of a rising star in my opinion in the CEOs. I think he's going to build this into a big company. He has 3 mines to build. He's got Mercer in Utah, and then he's got an underground and an open pit in Idaho. Can't think of the name of it. But combining the all three is going to be 250,000 ounce producer, long life. And Hugh, the thing that's great about it is you don't see too many of these development stories that have really strong management with a really good plan. And Revival has that. I think Revival definitely has 20 bagger written all over it here. And I don't think Hugh's going to be done. I mean, I think he's going to build these 3 mines and then go build another one. So I'm excited about Revival. Andean Silver. This is another one that's kind of under the radar. We've heard of Andean Precious Metals, which is a producer. Well, this is a development story. 25 bagger. So you got Silver Storm and you got Andean. So we go look at Andean. Uh, I have it rated very high, top 25, 4.3 B plus. So if we look at it, so this was it was a private property and they acquired it from a private property. So 4.5 million ounces. They produced 4.5 million in 2024. So they were a producer, but I have them. Let me look at this. All the production comes from third party, or they're hybrid. Insiders own about 65%. Oh, I'm on the wrong mine. I'm on the wrong one. I was wondering why something was wrong. It's Andean Silver. I love Andean precious metals, by the way. The recent news release where they acquired we don't know exactly how much silver they acquired, but I think it's probably about 40 million ounces, which fixes Andean precious metals, their mine life issue in Bolivia. So Andean precious metals looks really, really strong. Okay, Andean silver, top pick, not a top 25, but very, very highly rated. Um, Another one that's trading in Australia. So we had Sun, which is in Australia. Then you got Andean, it's in Australia. The other one that's in Australia is Unico. So Andean, Unico is in Argentina, and Andean, I think, is in Peru. It's in Chile, excuse me. So Andean is their Cerro Bio project in Chile on 70,000 acres. Um, so the mine was put on care and maintenance in 2022, and after producing 45 million ounces of silver, but it still has 90 million ounces at 300 grams silver equivalent, including gold. So it's a big deposit, 90 million. It's high grade, 300 grams. It's a past producing mine, so that's low capex. Um, and the mill's in really good condition, fully permitted. And so this is one of those ones that's it really checks all the boxes. Uh, Strong economics, long mine life, low, strong insiders, very, very cheap. So we have 30% insiders, $108 million. I think there's a lot of these Australian stocks that don't mine in Australia. It's like nobody wants to own them. It's like it makes no sense. I mean, we got 110 million ounces of silver equivalent, including gold, high grade, 350 grams. It looks like they might have some open pit. So I'm using of that 110, it looks like I say that they're going to find more based on my research. So I'm using 125, 5 million ounce producer. So if they're a 5 million ounce producer, that's at $100 silver, that's $350 million in free cash flow. makes him a 25 bagger. So this stock's under the radar, I think. It's like, what's going on here? How come nobody wants to own this thing? So let me see. The one thing that we want is, okay, when is it going into production? So they plan to drill. They drilled last year. This year, and this is how this has always worked. So when a company acquires a project, they always drill to make sure that the last guy that drilled, that his data is accurate. They always do that. And so they drilled last year, and then they do their own scoping study, which they're doing this year. And then after they do the scoping study, they'll find out what the capex is, and it's going to be really low, thinking probably less than $20 million. And then they restart the mine. This thing looks really, really good, right? I mean, looks like a slam dunk to me at that upside. Lahontan. Um, I'm a big fan of Lahontan as well. So let's go look at Lahontan. Lahontan is a 2 million ounce gold project in Nevada that should be construction ready in 2 years. Strong insiders, typed the wrong thing in. Um, the CEO, Kimberly, she told me that they're taking this to production. She's not selling it. She's got the insiders. No one's stealing her company. And she said she already has the financing. And I'm going, how can you say that? She goes, Don, I have it lined up. So she's confident that she's going to have no problem financing the capex. Her market cap is $24 million. And she thinks that she's going to have no problem financing the capex. So we have a resource of 1.9 million at zero point 0.9, and about 50% are oxides. So those oxides are going to be, that's what they're going to mine first. And so it's going to be low cost. You're looking at, an oxide mine in Nevada. Zero point 0.9 is one of the higher grade oxide mines in Nevada. You're looking at $1,000, $1,200 ASIC, which is plenty economic when this thing gets built in 2 years. Silver's going to be gold's going to be north of $4,000 when this mine gets built. I mean, it's kind of crazy that the market refuses to give this company any value, $24 million. Now, it crashed. Victoria Gold owned like 30% of the company, and then Victoria went bankrupt. And Victoria, the forget the name of the term they use for whoever is overseeing the bankruptcy court. But whoever was overseeing it, took over control. They had to sell all those shares of Lahontan, and everybody knew it. And so everybody knew there's this downward pressure because 30% of Lahontan shares are going to get sold. And so the stock just started going down, down, down. And it got all the way to 2 cents US. Now it's at 6. I bought it at 2 cents US, and now it's at 6. And it's still cheap at 6 cents. It really hasn't rebounded all the way. And so the capex is 135 million, and she says, "Don't worry, she says that she can finance it." Usually, the problem is that when you have a small capex like that, the bank won't loan you the money, and she's not worried. And so, but I do think by the time in 2 years, by the time she goes to finance it, I think this thing will be north of 50 million, maybe even north of 75 million when they do go to finance it. But this thing is growing in size as well. It's at 2 million ounces, 1.9, but they have this another property called Santa Fe West, that they have that has very good geology, and they're very confident it's going to add ounces. Plus the Moho property, so they have two other properties they're going to drill. They're confident it's going to get to 3 million ounces. So that's interesting. I mean, even at 2 million, what they currently have, it's still cheap, if you will, at $23 million. And so this one is very exciting. So I'm valuing it at 2 million ounces as an 80,000 ounce producer. And they do that. We got free cash flow of $240 million, and their current market cap is 24. As they say, you can't beat that with a stick. Print is a 20 bagger. So I'm a big fan of Lahontan. Someday that stock's going to start ripping higher. Unico. So I just mentioned this one. This is the one that's in Argentina, another Australian stock. So how much time do we have? We have about 20 minutes to go. Um, I don't know if I'll be able to get down this whole list. I was hoping to. Um, Maybe I can go a little faster. There's some really good names on here. Um, Unico. The ones I'm spending more time on are the ones that you probably aren't aware of. The ones that have a little bit better understanding, I'm going a little faster on. But like Unico is probably under the radar because it trades in Australia, so you probably have ignored it. Now, I don't have it as a three, so let's see why. There's probably a reason, but it's 68 million. Um, and the reason why is because it's early development, but they've been doing consolidation down in Argentina. And I'm excited about this. They recently acquired the Pinguino project, which I've been following for years. It's 80 million ounces. So they added that 80 and they already have 92, or no, they now have 92. Um, so they have 92 million ounces. Whoop, I'm wrong. It says combined, they have 160. So there's a typo here. Now, then in 24, okay, I got it. So when they added Pinguino, it took them to 92. Then in 24, they added Joaquin, 90,000 acres. Remember them being consolidated. And Joaquin had 41. So now, combined, they have 160 million ounces at 150. So that's a lot of silver. 150 isn't high grade, but at higher silver prices, becomes economic. So they're slowly putting their ducks in order and getting ready to put this stuff into production. But this is an early story. But there's not that many companies that have 160 million ounces, and it's super cheap at 68 million. So some of these development stories, I like to get in early and then cross my fingers and then wait and see who the winners are. But they have plenty of cash. They have $8 million. They don't need to do a ton of drilling here. They do some infill, but they already have the goods. They need to find a starter mine. What is going to be their starter mine? And then they have three properties. They have three mines here, but they could turn out to be a big player in silver. And there's not that many big players. I have them getting to a 5 million ounces, 5 million ounce producer, but that's not going to happen overnight. But if they can become a 5 million ounce producer, that's 350 million free cash flow versus 68, printing as a 24 bagger. So I think Unico is definitely interesting. 1911. So this is one I can do fairly quickly. So most of us would know about the story of 1911. They're trying to restart the True North mine that at one time was valued at $1 billion. And I think it's going to go back to $1 billion again. And so it's basically going to round trip from 1 billion all the way down to, I think they were sub 10 million. And now they're still super cheap. I think 20 million, 25. And now I think they're going to round trip and go all the way back to $1 billion. But it's a new company now. But the property itself, the True North mine, I mean, the value of the True North mine, and they're drilling it underground right now, and it's going to take them about 2 years to restart. But it looks like a real slam dunk. They have strong insiders. I don't think they're going to give it away. I think they're going to restart it. Eric Sprott, I think, is involved in that one too. I'm not sure. I guess we could take a quick look and see if he is. Something I think he does. So I put the insiders on notes under people. Eric Sprott, 17%. I was right. So they're not going to sell. They're gonna take this they're gonna build that mine. And True North, that's another one, 20 bagger. I mean, a good location in Canada. It's fully permitted. The capex is going to be very low. It's about 2 years out. Looks really good. Silver Mountain, don't like the risk reward on that one. Unigold, don't like the risk reward. West Vault, I West Vault's for me is more of an optionality play. I don't think they're going to build it. The CEO, Sun Valley, who's an investment company, he's the CEO. He's the founder of Sun Valley, and he emailed me and said that it's risky to build a mine. He actually said that. It's risky for shareholders not to build a mine is the way I look at it. But West Vault, their project is construction ready in Nevada. If they build it, it's a 20 bagger. And the CapEx isn't super high. It's open pit mine. It's slam dunk. Build it and then sell it. So maybe they will, and I do own it, but I think it's more optionality. I think they're gonna sell it. International Tower Hill. I'm a big fan of this one. I think it checks all the boxes. It's in Alaska. It's in a good location. This thing gets permitted, this thing's gonna get built. Very strong insiders. They're gonna, they are gonna, they are gonna They are going to build it. I like that one a lot. Liberty Gold, I've never owned it, but I think it's a fairly strong development story. That I never really liked management. Um, no, I don't have a problem with management. I just didn't have I wasn't excited about how they were showing their plan on what they were going to do. They kept drilling. They have two properties. They kept drilling and drilling and drilling. And I didn't know if they were going to build them or what they were going to do. Now they're leaning towards development, which is good. There's a lot of people that really like Liberty Gold. I just, so there's certain companies like Liberty, Wallbridge, where I just don't get a good feeling for that they really want to do it, that their heart's not in it. I like companies where I feel like their heart's in it, and we're going to build this because we want to make a lot of money. Those are the companies I have to get excited about. First Mining, I think their heart's in it. I think they have a plan. The key here is their permitting. Once they get their permit, I think First Mining will be off and running. I think First Mining, I do own it. I think First Mining has a future. The key, but there's some risk there on getting their permits. That first mine, it's a bit sketchy. I mean, they got to move a lake. And you were talking about Canada. Canada is a blue country. What I mean by blue is, I mean, they're liberal. And so you're going to move a lake, and it's just one lawsuit away from one environmental group saying, you can't move a lake. That's no, no, no. That's bad, 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 right? So that concerns me. Maritime. Um, I love Maritime. Maritime, the hammer something is their deposit, and they keep coming out with these unbelievably good drill holes. They had a 330 gram meter hole this week, 8 meters at 40 grams. I mean, just a beautiful drill hole, and that's on top of what they already have. They have two mills, two working mills. They're good. They've been working, they're ramping up production right now. They're testing. I think they're mining a stockpile, but the mill is basically in operation. They're going to mine Hammer Pit's open pit. And then the drill holes they've been finding are definitely underground. I mean, really, really high grade. And so Maritime just keeps looking better and better. I think Maritime and Newfound Gold are like a perfect match. I don't know why Newfound Gold doesn't go and buy Maritime, because they're going to pick up two mills, and then they got the free cash flow for Hammer. Okay, let's go and check out what it's called. But I just think that's a perfect merger for them. Um, Maritime, and they've already been talking to each other because they've made a deal with Newfound Gold that they can use their mill. And so they're already in talks, but it's called Hammer Down. So I forgot to put the drill hole in here. Usually I'll add when they do a fantastic drill hole. But they've been having some really good drill holes at Hammer Down. Um, they just did the reverse split, which is great. So now they're trading $1. Um, and so they basically fixed that. That was a problem. Usually reverse splits are bad, but they waited long enough. So now I don't think their share price is going to drop. So when you do a share split, you want to make sure in your timing you want to be good. So now that they're ramping up the mill, they got away with that reverse split, which was really good, And so now they're trading $1, 55% ownership. Balance sheet is okay. 139 million, which is really cheap for a 50,000 ounce producer in Canada. So they print as a 17 baggers a 50,000 ounce, but I think they're going to exceed this. They have some really good exploration potential, but I, you know, but 139 million Newfound should just go after them and just grab those 2 mills. And then who knows what else they're getting. I mean, they're getting this hammer down project that could have, another 2 million ounces with some of these high grade holes. Maritime has a lot of really good drill targets on their properties. So, um, I'm excited about Maritime, where they're at, what their value is. New Pacific, um, the problem with New Pacific is Silvercorp owns 28%. So I don't see a scenario where Silvercorp doesn't end up acquiring this project. It's just a matter of when they do it. I think they're going to wait. They're going to be very patient. They're going to let New Pacific basically spend the money to get this thing fully de-risked, and then they're going to go in. But if you own New Pacific, and I do own it, you're going to also want to own Silvercorp. And so that's you always want to do that. Whenever you own a development story that somebody else is potentially going to buy, you want to own those companies. A couple examples is if you own Cabral, you want to own G Mining because G Mining's right next door and they want to buy it. If you own Abra Silver, then you want to own Kinross and Fortuna because those are the two suitors. Kinross owns, I think, 6% of Abra, and then Fortuna is right next door to Abra. So you want to own those. You always want to own the buyer. Canna Gold, I'm not a big fan of Canna Gold because it's a small deposit, about 1 million ounces, and not a great location in Alaska. Or I think it's Canada, but it's not in a great location. It has kind of infrastructure issues. However, the company that owns Mineros, which is really interesting, they're basically changing the whole management structure of Mineros, replacing the CEO and the CFO. They took 65% ownership of it. They actually own a big chunk of Canagold, and he told me that they are going to expand their resource at Canagold, which makes Canagold very interesting. I actually own Canagold and sold it. I kind of gave up on it because they were making slow progress, and I didn't think the deposit was going to grow in size. But now, according to him, he thinks the deposit is going to grow at Canagold. If this deposit can go to 1.5 million ounces, then this thing is a 15 bagger. So that's interesting if you do own it. Goldshore. Um, uh, I like Goldshore and I do own it, but I'm concerned about permitting because of water. So I'm worried about First Mining because of water. I'm worried about Goldshore with water. So there's water all over their property. And water always worries me because of environmental issues. But if they get it permitted, it's going to be great. The problem with any project that has permit issues is if they don't get the permits, you could lose everything. The risk is really, really high. That's why you want to own in these development projects, you want to own development projects that are already in mining districts that have a high probability of being permitted. Anything that has permitting risk, you got to be very careful. You don't want to take high allocations. So I don't have a high allocation in Goldshore or First Mining for that reason. If they go broke, they go in, so what? I don't care. I take the emotion out of it. I have a pain threshold. As long as I'm below my pain threshold on my allocation, then I don't worry. Okay, if one of those works, so First Mining works or Goldshore works, if one of them works, doesn't matter if the other one fails because you're getting a 20 bagger. 15 bagger. Bobe Minerals, not a fan of it. It's mainly a lead mine, but you can take a look at it. It's pretty cheap. If you think lead is, they also have silver, but it's mainly a lead mine. I think 20-30% silver. I don't even have it at 30% silver. I think it's more like 20-25% silver, the rest lead. Investigator Resources. I like this one. I think it's in New Zealand. No, it's in Australia. Excuse me. Moranen is in New Zealand. Investigators in Australia. It's a low grade. It's a very low grade project in Australia. Um, this one is one of those ones for people that don't that you know, if silver prices really explode, silver projects are going to be rare, and silver projects in Canada and Mex and in Australia are going to be even rarer. So they're kind of like unicorns. There's not that many. And Investigator is a real silver deposit in Australia, but it's low grade. I guess I better take a look at it. So you're like, okay, Don, what is the grade? Um, I think it's 60 grams. 57 million ounces at 72 grams. So, and only 75% recovery rate. So that's pretty nasty. So it's only 45 million ounces, but that could be 6 million ounces for 8 years or 5 million ounces for 6 years, something like 7 years. Let's make it more 4 million for eight, something like that. Yeah, okay, 4 million for seven. PFS is 4 million ounces for seven. So maybe they can expand it to 4 million for eight. So it's a short mine life. Maybe it doesn't get there. I you know, I bought it, but I bought it with, I don't know what I paid. I know I got it for a real cheap price. I think 2 cents. It's still trading at 2 cents. Um, but this one has a lot of risk. Absolutely. It prints as a 14 bagger, but I don't know, 300 million free cash flow. If you can produce 4 million ounces of silver, you're going to get a ton of free cash flow, $100 silver. But this one has a lot of risk because it's a small deposit and it's low grade. So a lot of people are going to pass on that. Argenta, so we can do Argenta fairly quickly. Um, this was the project that Frank Guster had just purchased um, down in Argentina that looks pretty darn solid. So it's basically a big silver mine, but they have to drill it, they have to permit it, they have to, the capex, but it's happening, if you will. But this is a 3 to 5 year project, but I think it's definitely going to work. I think that the one thing that's good about it is Frank's backing, and plus the economics is fine. It's good grade, it's growing in size. And the thing is Frank said he wanted to build a silver mining company. This is not going to be Argenta's. This is going to be Argenta's first mine. There will be a second. That's the one thing I like about it. It's basically you're going to bet on people. It's a solid project, but it's going to take some time. But you got Frank's backing. If you want to bet on people, that one's definitely worth a look. Horizon Gold. It's just an arch. And we're about running out of time. We got about 5 minutes. I wish I had more time. I'm looking at this list, and there's a lot of good names. There's a lot of good names from here down. I wonder if I should do a part two. I get, yeah. Okay, I'm gonna stop it here and do a part two because there's a lot of good names on the rest of this list that I can cover, but I don't want to really go more than an hour um, on one. So I'm going to stop it here and I'm going to do a part two. So we're going to stop the record.